All right, if you're a business owner, an entrepreneur, or a 1099 contractor, listen up. This one is for you. We are about to break down the mortgage playbook that's actually built for how you really make your money.
So, does this sound just a little painfully familiar? Your business is absolutely crushing it. You see the money coming in, you know it's there. But the second you go to get a home loan, you get hit with that frustrating no. I'm telling you, you are not alone. This is an incredibly common problem.
And this whole struggle? It leads us right into what I call the entrepreneur's dilemma. It's this maddening paradox that trips up so many successful people.
I mean, think about it. You run a smart business, right? Your CPA, who is doing their job perfectly, tells you to write off that new equipment, deduct your business mileage, and reinvest your profits to grow the company. And you know what? They are 100% right. That is a brilliant tax strategy. But then you walk into a bank with that same paperwork, and all of a sudden, those smart moves are treated like massive red flags.
So what is the root cause of this whole mess? It really boils down to something called the tax return trap. And the truth is, the conventional lending world was just never designed for the modern entrepreneur.
Let's be crystal clear on this one point. The problem is not you. It's a banking system that has rules written for a completely different kind of player. After 2008, the entire system was rebuilt to favor easily verifiable, super predictable W-2 income. It created this standardized little box that, let's be honest, many successful business owners just don't fit into.
And this slide, wow, it just shows the disconnect perfectly. In your reality, your business might have, say, $250,000 in actual cash flowing through it. But after all those smart, strategic write-offs, your taxable income, which is the only number most lenders will even look at, is just a tiny fraction of that. The gap is just massive.
So it's not an income problem at all, it's a structure problem. See those standard loans, the ones backed by Fannie Mae and Freddie Mac? They must use your tax returns. It's literally a regulatory requirement. And what that means is that every single smart write-off your CPA recommends is actively working against your mortgage approval.
But what if you could just bypass that whole tax return trap completely? Well, you can. So let's talk about the solution. A type of loan designed from the ground up specifically for business owners just like you.
It's called a bank statement loan. And instead of looking at your net income after all the deductions, this loan qualifies you based on the actual cash deposits coming into your business accounts over, say, 12 or 24 months. Lenders analyze that gross revenue. They apply a standard expense ratio for your industry, and then they determine your qualifying income from there. It looks at what you really make.
And this isn't some niche backdoor workaround, it's a mainstream financial tool. If you're an S-Corp or LLC owner, a 1099 contractor, a real estate investor, basically, if your financial life doesn't fit neatly onto a W-2, this was made for you.
Now, whenever we start talking about non-traditional loans, I know a bunch of myths and misconceptions always seem to pop up. So let's just clear the air right now and separate the fact from the fiction, shall we?
Okay, let's bust these myths one by one. First, it is not a last resort loan. It is a strategic tool. It allows you to keep running your business in the most tax-efficient way without sacrificing your personal real estate goals. Second, it is not for bad credit. It is for prime borrowers. Your credit score, your assets, your financial history, all of that is still heavily scrutinized. And third, it is absolutely not stated income. Those were the no-doc loans of the past. These loans require heavy documentation. We're talking 12 to 24 months of bank statements to prove your actual verifiable cash flow.
And that really brings us to the most important point of all. These are prime loans. Many of the business owners using them are actually financially stronger than the average W-2 employee. They just can't show it on a standard tax return.
So the tool exists, which is awesome. But a tool is only as good as the person who's using it, right? Just knowing this loan exists isn't enough. The single biggest factor for your success is having the right expert guiding you through the whole process.
So here's the hidden trap. A lot of lenders, generalists might say, oh yeah, we do those, but they only dabble. They don't live and breathe the tiny little nuances of different bank guidelines and expense factors. And that's exactly why so many business owners get told no, even when a yes is totally possible. The generalist just doesn't know how to structure the file the right way. A specialist, on the other hand, follows a proven playbook. They analyze your true cash flow, they match you to the right lender whose internal rules actually fit your specific business, they meticulously structure your file, and then, and this part is key, they act as your translator to the underwriting department. It is a completely different and far more effective approach.
All right, let's move to the final takeaway and see how all of this builds to the ultimate goal, getting you into the home that you've earned.
At the end of the day, this is the bottom line. To go from another frustrating denial to finally holding the keys to your new home, you don't just need a different type of loan, you need a different type of advisor, someone who specializes in your world.
So, I'll just leave you with this one big question to think about. Your CPA is helping you optimize your taxes, and that's great. That's smart business. But is that same smart business playbook unintentionally blocking you from your biggest life goals? Because getting approved often just means finding an advisor who knows how to make the system finally work for you instead of against you.